Welcome back for another episode of SLMA Radio. With our rotating series of topics and shows. This week it's Mark Godley and Mark's program Data Dump Radio. This is a show where you can hear top B2B vendors and buyers discuss the reality of today's data landscape. In it, Mark will help you navigate your buying decisions and enjoy a laugh along the way. Data Dump is sponsored by LeadGenius. We welcome that genius himself, Mark Godley. Hey, Mark.
Well, thank you, Paul. Paul is our announcer today for this month's Data Dump podcast. Jason Mironov of TA Associates with us. Jason, thanks for joining.
Mark, thanks for having me.
And the reason I'm so excited is we've had other data vendors on this podcast. We've had buyers of data services. But what we have in Jason is this neat combination because he is a buyer, but he's a buyer of data companies. TA Associates is a private equity firm that makes investments in organizations, one of which is information services companies. And I thought it would be fascinating for our listeners to hear his perspective on the capital markets today and more specifically the data space in general. Before we get into that, though, because private equity is not as well known as the VC space, Jason, I'd love for you to tell our listeners a little bit about what private equity is.
Yeah, happy to do it, Mark. So first of all, thanks again for having me. And when you think about the spectrum of capital, right, to your point, I think the venture capital world is on one side of that barbell. They're providing capital to early stage businesses, folks who have ideas and platforms that they're trying to build at a relatively nascent stage. And on the other end of that spectrum, you have what I think of as mature late stage buyout companies, right? These are companies that may not be growing as much anymore, or they may be actually declining in market size. And we certainly see a bunch of those in the information and data services space. I mean, a good example actually would be D&B was recently taken private or an announced take private by a bunch of folks who are looking at restructuring that business. That's the other end of the business. And where I sit at TA is we are focused on growth-focused private equity. These are companies that are out of their infancy, that have a demonstrated product or category. They've built a profitable business, and frequently they're bootstrapped because the DNA of the companies that we like to invest in are typically founder-held companies that have developed a market niche, that have a target audience, and have been able to build a real business with some sizable scale. And in particular, just in terms of the types of investments we're making investments on the low end of about $70 million, upwards of $500 million. So that can really range. And unlike venture capital, we're also control agnostic, which means oftentimes we want founders to stick around and control their destinies. We'll own 20% of a business versus 80% of a business. And so it is certainly a large asset class, not only domestic in the U.S., but globally as well. We manage a pool of capital to it's just over $7 billion, but there is $1 trillion and change of private equity capital, I think, that's been raised globally. So certainly it's a focus area. And information services is a great target for people like us because these are great recurring revenue businesses who have demonstrated, I think, a real steady path, especially as the economy gets to be more sophisticated.
So that growth focus companies that are looking for private equity, as opposed to some of those dinosaurs like D&B, is that your focus at TA, or is that TA's focus in difference in the private equity space?
Yeah, it's a great question. It is TA's stated mandate and focus within private equity. And if you sort of oversimplify the industry into two categories, you can make money by investing in great businesses, often at high prices, and helping those businesses grow as best you can by adding resources and people and recruiting and market opportunity, and really creates this stew of growth, I'd say. And then the other way is, I think what happens with some of those mature businesses where people come in and they say, hey, gosh, maybe you're overstaffed in this area and this team isn't as profitable and maybe we can increase price here. It's a very different model and one that I haven't experienced in my career. I tend to find the growth companies a lot more exciting and the stage at which we invest, I think, a lot more compelling.
Yeah. And you said that you often are looking for bootstrapped or founder-led companies. Does that mean you guys are not the kind of private equity that comes in, buys out prior rounds of most, well, in the world I frequent, VCs Or is that capital of 70 to 500 million mostly going to operations?
It's an interesting dynamic because as our industry continues to evolve, there's no clear-cut answer. So frequently we are buying out another venture capital firm or private equity firm, but you really got to count on the DNA being similar to ours, which is this focus not on just throwing money, at a problem and seeing if you can find a strategy, but rather developing, I think, a sound business model that involves a profitable outcome. And so that's where we tend to focus. Where venture capital companies may say, hey, why don't you go burn a bunch of cash trying to figure this out? We like self-sustaining businesses. And so the second half of that answer to your question is frequently we are putting cash to work either through acquisitions or we may provide some primary capital. But I'd say a majority of the time we are providing secondary liquidity to those founders or to individuals, but we really are trying to set up those companies for success.
And is it fair to say that with the amount of dollars you're throwing at these companies, it's also part of your thesis that you're looking to do tuck-ins or roll-ups? Is that a common strategy of inorganic growth, or is that vary case by case?
Look, we don't have a playbook per se, and you'll hear that vernacular used quite a bit by private equity firms today where we say, hey, in every company we need to do X or Y. I think each business that we evaluate, we really try to take a bespoke approach to the strategy piece. And so if you can make accretive acquisitions, we think it's great. And we've done that across our portfolio quite frequently over the last few years. In fact, that number has increased rather dramatically for us. It helps that the debt markets can lend themselves, frankly, pun intended, to really creating a nice capital structure for these businesses. But I think at the same time, there may be companies that we invest in at an earlier stage that may not have that pattern recognition to be ready for M&A. And so maybe we're spending more time on different strategic initiatives like recruiting and pricing and customer development and stuff like that. But I do think M&A is a great lever, and nothing makes us happier than putting good money behind good money and continuing to invest.
Are there typical time frames you look for in being in a business? 36 months or 5 years, or again, every deal is probably different, but I'm just trying to think about parallels to the venture capital world. I think a lot of people listening to this podcast are very familiar with 5 and 5 type scenarios. Do you guys have similar metrics you're looking for on returns?
My instinct tells me, and I don't have the data in front of me to sort of prove this, is that we tend to look for a longer hold. So if you start at the top of the funnel, our fund lives tend to be at least 10 years, right? They'll often get extensions to be longer than that. And each individual investment, we think of and underwrite to a 5 to 6 year average hold. Sometimes it's more, sometimes it's less. And each entrepreneur that we partner with, I think, has a different sort of view on how long they want to be involved in the business. And so while there's no hard and fast rules, we have a lot of flexibility to be in businesses longer. And given the subscription nature of a lot of the businesses and information services, these are businesses you can feel comfortable holding for quite a bit of time. Yep. And so that's something that gives us good comfort.
Good. Okay, Jason, I have a confession to make, and I'm hoping you can help me out because although I'm familiar with the private equity markets in general, some of what's happening in the private equity space right now has my mind boggled. Get it? And by the way, I have missed trends left and right. I never bought Amazon stock. I never bought Google stock. I mean, I could have been a billionaire by now if I had a sense of this stuff. So I'm not good at seeing trends and futures. But what I'm referring to is in the software space, I don't know that TA has participated in this, but there's some other folks whose names will not be mentioned, some other of your peers, that are taking public companies private, even in the MarTech space, paying massive multiples, and in relatively short fashion, turning them around for sales at enormous returns. And I don't consider myself a dumb person, but I'm marveling at the seeming premiums being spent on companies that don't necessarily have market caps or addressable markets that would justify the amount of money that's being thrown around. Have I lost my mind, or am I the idiot?
I will be the first to admit I don't know the answer to the question. Every market cycle in history, there's a point where people say, gosh, it feels like people have lost their minds. And I think, even look at the crypto markets, last November, I think that's an evidence in a much smaller, I think, microcosm of how things can boom and bust quickly, especially in markets that are earlier in sort of life cycle and perhaps not as well established. And so I guess when I put my sort of thinking cap on when it comes to some of the things that are happening with larger public companies, I think what frequently happens is businesses that are growing beyond a certain level begin to take on a life of their own, right? There's a bunch of management teams that will come through and perhaps start different divisions of organizations. The strategic initiatives will change over time. And what inevitably happens is you get these huge complex animals. And in businesses like software and information services, these tend to be massively profitable businesses. And so that can mask a lot of perhaps poor strategic decision making over a course of time. And so, private equity firms can come into these businesses and really take a granular approach and say, okay, gosh, are we spending too much money in this area, or have we mispriced a different aspect of the market? There's a whole bunch of different strategies into making these businesses more profitable or to grow faster. And I think it's tough to say in general that people have sort of lost their minds, to borrow your terminology, because if you keep looking at these businesses over time, we may have thought that 3 years ago, we may have thought that 5 years ago. And what you're seeing is, I think, a lot more creativity. And a couple things I'd mention. Look, there continue to be larger and larger private equity firms that are being built on the backs of this type of strategy, coming in with a playbook, turning businesses around, cutting costs, trying to accelerate growth. And that has been a profitable model. And as long as there continues to be capital available, whether that's in the public or the private markets, that will continue to be a strategy for other types of firms. And again, that's maybe not necessarily our DNA here at TA, but it is certainly something that we see in the outside market and respect. And so I think the bigger question for me, when I look at what's happening both in the buyout world and some of these take privates and some of these older businesses is there a hidden gem in these companies that you can strip back to? Because it's really hard to do that in the public markets, right? If you're reporting quarter to quarter, month to month, day to day, and you have a big disparate shareholder base to reply to, it's really hard to make more than just sort of tiny changes. So it's a great question. If to your point, if I had the answer to it, I'd be a billionaire as well. But it is sort of a fascinating time.
Well, it sounds like you don't think I'm crazy, but it sounds like you think I should sell my Litecoin and Ethereum and Dogecoin shares. But
I'm the last person that should be giving investment advice, so that's my disclaimer.
I won't make any decisions based on your opinions there. Hey, let's take a quick break. When we get back from the break, I want to dive into your particular investments in the information services space. I know we'll have a fun time talking about that. But for a moment, let's pause the discussion. Let's have some advertisers jump in here, and we'll be back in a couple minutes.
And one we want to remind you about is this. It's a really simple question. How well do you know your total addressable market? Really? What are the most profitable microsegments of your audience? Who are all the decision makers at your ideal accounts? Do you know? Well, there's a company that can tell you, LeadGenius. LeadGenius helps business-to-business enterprise companies such as Google, eBay, and Square power their go-to-market strategies. And they can do that for you as well. LeadGenius has the highest quality contact and account data available anywhere. How? Well, LeadGenius verifies every single data point with a unique combination of real human researchers and machine learning. Quality is assured. Accuracy is 100% guaranteed. How about that? If you think that's impossible, or you think it's something that you just really got to check out, then see for yourself why enterprise marketing and sales leaders trust and use LeadGenius. Visit LeadGenius.com to learn more about your total addressable market today. That's right, just go to LeadGenius, just like it sounds. LeadGenius, LeadGenius. And look like a genius in your organization. All right, back to our second half of our interview.
Okay, and welcome back. Jason, that was a fantastic 10 or 12 minutes about the private equity space in general. And now I want to dive into something where that overlaps with most of our audience is interested in B2B data. And you and I got to know each other when TA Associates got affiliated and made an investment in Discover.org. I'm a huge fan of that company. I'm a huge fan of the people that started it and what they've been able to do. It's fun to see a scrappy upstart become the incumbent. And I really see what you have done with them as helping with them with that transition and that rise to power. I'd love to hear your perspective as to what did you guys see in Discover.org and how has that played out over, how long has it been now? How many years?
So we invested almost 4 years ago now. So yeah, we've been involved in the business for a decent amount of time.
So tell us about it. What did you see? Why did you make the investment? And how's it playing out for you? I imagine good.
Yeah, we've been incredibly lucky, Mark. So we first came across this business. We have a vertical thesis around sort of sales enablement data. And it's taken some time, I think, for that industry to really develop. Certainly there have been a bunch of venture-backed companies. I think there's been a lot of attempts. Certainly predecessors, including a company we acquired, iProfile, was doing this even in the late 90s and early 2000s. But as is often the case, it takes time for the sophistication of sales teams and organizations to catch up with the level of, I think, technology and infrastructure and investment that really has gone into the sales enablement data space. And so taking a giant step back, when we first came across the company, I think a couple of things were really evident to us. First and foremost, the culture and the people. And Mark, you alluded to this, and I think that respect is certainly mutual. I think the folks at DO have always respected the work that you've done as well. But we walked in there and we realized the word you use, scrappy, is incredibly true of that team, right? You have terrifically smart people. You have driven people, and you have people who have foresight for what's going to happen. But they're also not afraid to challenge each other, to ask the tough questions and to make the hard decisions. And that was evident to us just coming in from the outside, that the culture that they had built had a growth mindset, had a can-do mentality, and really had the opportunity to scale. And so, while that's true in every industry, this was especially true at Discover.org. It was a culture that we wanted to be associated with. I think the second is rarely do we get to come into a market that has such a massive TAM, a total addressable market. And so what's neat about being involved, for us is certainly the chance to be involved in an organization that is, I think, on the front end of the proliferation of sales enablement data. And so the idea was, look, this is an industry that is in nascent stages. Even when we were investing, companies were starting to really focus on account-based marketing. And I think we see that as a trend that continues, right? The size of outbound sales forces within organizations, really focused on a one-to-one account-based approach has only continued to increase. And so the real ability to educate these sales teams with data, with information, with knowledge, I think gets to be more and more important. And as that continues to develop, it's analytics, it's intent. There's a whole bunch of stuff that can sort of happen over time. And so that was the second thing we saw. And then the third thing we saw is just a really great trajectory of growth, which is something that we here at TA take really seriously, which is, hey, it's an efficient model. We can continue to scale it. We can make investments in areas, and hopefully we can be a strategic partner to management. And so getting involved in a business like that is a great opportunity, not only for us, but for other folks that we will have involved as well.
Kudos to you guys for seeing kind of beyond the horizon with them. If you go back to their founding and even before you guys got involved, what I am so impressed with is the whole B2B data world was focused on quantity. It was all about volume. A couple college kids, some with legal degrees said, no, it's not about that. It's about quality of data. And there are these guys up in Oregon saying, you're seeing the world wrong. And they were the first ones to bring forward that message. And, fast forward 8-10 years later, and the world's finally caught up with them. And they've kind of won. It's just amazing to see them go from, to your point, they're not afraid to ask hard questions. I call them, not just scrappy, but contrarians as well. They're not here in the heart of Silicon Valley, so they're not subject to the groupthink that sometimes all of us get prone to. And I just think it's been amazing to have seen, not only their growth, but they've changed the entire space to come along to their way of thinking. And I just can't say enough good things about them having done that. The other thing to give you some kudos, just while I'm blowing sunshine here, is you guys have left the management team in place. And certainly they've added across 4 years, but I'm used to seeing, once private equity comes in, they've got their peeps. They've got the henchmen and the people that can execute, to use a double entendre, I guess, to come in and grow the heck out of something. And the fact that you guys have come in and still felt that the team that came up with the idea in college dorm rooms could still manage a company that I think is widely known based on some recent acquisitions of probably being $100 million or more, something I don't always see. And given that I've been in senior management teams, I'm always worried about what target's on my back. And so the fact that you didn't have a target at their back, but you've been supporting them, I just think is phenomenal.
Thank you for the kind words, and just a little commentary on both subjects, because I think you hit the nail on the head, Mark, per usual. I think on just the strategy piece, their fanatical focus on the quality of data and the efficiency of the sales teams that they're enabling has made them continue to be successful. And the other part where I give Henry and the team kudos too is the idea of being a platform. Right, they are in the picks and shovels business. So if you're using Microsoft Dynamics, or you're using Marketo, or you're using Eloqua, or whatever you're using, they're going to help enable you to get access to the highest quality data. And the step that they took, do that in the olden days, certainly it was a very manual process. This was human verified data, and still much of it is, right? At the end of the day, it's this quality that's guaranteed by that. But the other half of the equation is they've continued to adapt over time. And, when Henry and Kirk started the business, and the story's on the website, but, taking down credit card debt, building a company from scratch in a bootstrap way, it's an extraordinary story for any American, right? For anyone who's starting a company, it's an inspirational story. But the fact that they've, to your point, continued to develop over time and really been an industry leader in this way is pretty neat. And so they've been able to build out this platform. They've been able to add incremental data. They've been able to add automation. Right. And so now a lot of what they're able to gather is involved with getting from third party sources as well, and adding that to the high quality data that they have. And so I think I'm excited about the places they're going, not all of which we can talk about today. And then to your point on TA, that is not accidental. Right. Part of being a good investor, candidly, is knowing when to stay out of the way. And so in helping enable these guys and support them with infrastructure and people and resources, that's our job. And so sometimes that means being the water boy. And I think that's something we're really comfortable doing, because when you get to align with such impressive team members, and it really is across the organization, it's the sales team, it's the research team, it's the management team, we're here to support them. And that means being relentless about our own portfolio and potential customers and making sure we're making calls to get them wherever they need to be. So thank you for the kind words, but it's easy to do when you have such a terrific, humane group of folks who are really doing a great job growing the company.
All right, Jason, we only have about a minute or two left, and I want to end with you and a crystal ball. I want you to make some predictions about where you see B2B data going. But before you do that, let's just dovetail or weave into some of the themes we spoke on a minute ago, which is Discover was really ahead of everyone else in seeing the future and rebelling against what was the common practice du jour. And we're coming off an interesting time in MarTech and sales tech, because we've been in this, in my opinion, we've been in this analytics wave/bubble. If you go back 3 years ago, many people would have said data businesses are dead. It's not about data, it's about information. And the people that are doing algorithms, and where those trends ended up being too much money flooding a space that wasn't as big, and now we're seeing the bloodletting happen. So you're not in that highly speculative business. So I'm really interested in your opinion of where you think the trends are going, because my bet is you're probably more accurate than some of those folks that are earlier in the cycle.
You're kind to say it, but I'm not sure I've got better insight than others. Certainly my feeling is that the next 10 years of sales enablement technology is all about the individual relationship with the individual and arming them with the data and intelligence they need to make a proactive sale in a way that creates efficiency for everyone. Right? And so if you think about what sales looked like 15 years ago, right, this was huge sales forces on the street selling large enterprise license packages or whatever product you're in or whatever category. It doesn't have to be technology. It could be consumer brands or other areas. It was, and I mean this with all due respect to the salespeople of the era, it was an unsophisticated sale. You had to figure out who it is that you were talking to. You had to understand what their wants and desires were. You had to get to know their business. And if you think about the percentage of what happens prior to a first phone call being made about, hey, how does this business work? And who is this person? What do they do before, right? And we all know the tools that are used for each of these. What technology do they have in place today? What is it that they're using? You're doing 90% of that prospecting before you pick up the phone, which is incredible to think, that you get access to this level of information and data on businesses 15 years ago would have been mind-blowing. Right. And I think the next chapter of this is going to be about figuring out what that individual needs and figuring out what are the not-so-subtle signals or what unstructured data is going into the universe that says, hey, this is a person who is ready to make a decision, who needs a specific product, who has demonstrated some level of intent, and marrying that with all of the other tools in place. I don't think it's going to be a prolific shift in how interaction's done. I think it's going to be growth in account-based marketing. I think it's going to be, the unification of all these disparate platforms that are being built today. And I think it's going to be there to create this opportunity and to facilitate transactions between those who are creating product and those who need product. And I think the more efficient we make that process and the more time we take out of it, the more time you're leaving people to go out and be more productive, make livings for themselves, and sort of increase the efficiency of our economy as a whole. So that's what I think the name of the game is. It's efficiency, it's time savings, it's economic savings, and it's increasing the ROI of the salesperson.
Well, excellent. We could talk for so much longer, but unfortunately we are out of time. Jason, it's been amazing to have you on the show. If people want to reach out to you, if they need, $100 million to grow their business, how can they reach you?
Yes, thanks for that. I'd encourage you to visit our website, ta.com, and we're always around to chat with folks, whether you're actively thinking about transaction or not. We live in this ecosystem. We want to do whatever we can to be helpful.
All right, Jason, thanks so much for your insights and candor. It's been great.
Thanks, Mark. Appreciate the time.
You've been listening to another episode of SLMA Radio, part of the Funnel Radio Network for at-work listeners like you.